All right, so have you ever been in a DSW, looked around, and wondered, what's the real story with this place? Well, today we're doing just that. We're diving into the report card for Designer Brands, the parent company of DSW. They just dropped their latest earnings, and we're going to break it all down, the good, the bad, and what it all means the next time you're shopping for shoes.
So when a big company like this announces its results, you see all kinds of headlines flying around. So let's just cut right through all that noise and get to the heart of it. How is this retail giant really doing? Are we talking straight A's, or is this a company that needs to stay after class?
And right out of the gate, you see this classic good news, bad news situation. I mean, look at this. On one hand, they totally crushed their profit goals. We're talking more than double what Wall Street was expecting. But on the other hand, their overall sales, the total amount of money that came in, actually fell short. So that begs the question, how in the world do you make more profit while selling less stuff? That's the big puzzle we're going to solve today.
Okay, to figure this out, we're going to break this down report card style. And first up, let's talk about the bright spots. The A's on the report card. The areas where Designer Brands is absolutely nailing it.
So how do they pull off that magic trick of higher profits on lower sales? Well, it all comes down to working smarter, not just harder. Look at that second bullet point. Their markdown rates improved. Now that's really just a fancy way of saying they sold way more shoes at full price instead of on the clearance rack. It's about quality over quantity, and you can see it really paid off.
And what do you do with all that extra cash you're making? Well, they're putting it to really good use. They paid down a whopping $47 million in debt in just one quarter. I mean, in this economy, that is a serious power move. It shows they're focused on building a really solid financial foundation for the long run.
In a world where you can buy pretty much anything, Designer Brands is making a big bet on less is more. They're zeroing in on their top 8 brands, and wow, is it working. Those brands are growing way faster than everything else, and now they make up almost half of all their sales. It's a really smart play you're seeing everywhere in retail right now. Get rid of the stuff that doesn't sell and just give people more of what they actually want.
And this isn't just some theory they have on a whiteboard. It's happening right now, on the store floor. The CEO gave a perfect example. He talked about boots. Sales of full-price boots shot up 8% this quarter. And apparently those trendy brown boots were a huge hit. It's exactly how their strategy is turning into real profitable sales.
But hey, no report card is ever perfect, right? It's not all A's. So now it's time to flip the page and look at the other side of the story, the areas where Designer Brands, has some serious work to do.
Okay, so remember that overall sales miss? Where did it come from? Well, the good news is their main business, which is DSW here in the US, was only down about 1%. That's actually a huge improvement. The real trouble spots were up in Canada and with their own portfolio of brands. Both of those were down big time. These are the grades that are really dragging down the overall GPA.
So what's the company's explanation for these big drops? Well, they're basically saying it was a perfect storm of bad luck. In Canada, the weather was just too warm, so nobody was buying winter boots. And then they had some shipping delays that pushed a bunch of sales into the next quarter. They sound pretty confident things are going to bounce back, but you have to wonder, are these legitimate one-time issues, or are they just excuses? Only time will tell on that one.
Okay, so we've seen the good, we've seen the bad, now for the most important part. What's the game plan? What is Designer Brands actually doing to fix the problems and get those grades up?
Their comeback strategy is basically a three-pronged attack. It's not about tweaking one little thing. It's a total overhaul. They're getting laser-focused on what they sell, they're completely rethinking the shopping trip itself, and they're making sure their operations are disaster-proof, so those shipping problems don't happen again. Let's break that down a bit.
So this first step is all about making sure that when you want something, they have it. They're basically cutting out all the clutter, all the weird sizes and styles that never sell, and they're focusing on the hits. So instead of being overwhelmed by a sea of shoes, you're way more likely to find that one perfect pair in your size. And guess what? It's already working. More people who walk in the door are actually walking out with a shopping bag.
And they're not just changing what's on the shelves, they're giving the stores themselves a major makeover. They're starting to roll out these new store designs that are more about the experience, not just about transactions. Think of it as a place to hang out and get inspired. And at the same time, behind the scenes, they're making their whole online operation a lot smoother, with faster shipping and way fewer of those annoying out-of-stock messages.
So when all is said and done, what's the final verdict? We've looked at the A's, we've looked at the C's, we've seen the comeback plan. To really figure out the final grade, let's go straight to the source, the company's own official forecast for the rest of the year.
And here it is, the bottom line. They're being realistic. They're not expecting some kind of miracle turnaround on sales by the end of the year. They think sales will still be down a bit, but, and this is the important part, they are confident they can still make a really solid profit. That adjusted operating income number, that's basically the profit they make just from selling shoes, before things like taxes. It really shows they're focused on running a lean, mean, profitable machine, even in a tough market.
So what's the final grade here for designer brands? Well, it feels like they're acing the parts of the test they can actually control. Profitability, paying down debt, focusing on their best brands. But they're still facing this massive final exam from the economy and from a really tough retail environment. So the big question, the one that really matters, is this. Is having a smart strategy enough to guarantee an A+ in the long run? That is the billion-dollar question that's going to decide the future of this shoe giant.